Good evening, ladies and gentlemen. We are Global Robotics, and we are a company that focuses on UAV, drone, and camera production among the various markets. And our senior management team is Eduardo Collin, Chris Darrow, and Zoe Sherman. And Eduardo will be going into our overall financial performance for today.
All right, so here you can see our several graphs that contain our earnings per share, the stock price, and the return on equity. Below those graphs, it's just a table demonstrating the years and the growth we had in that year. For earnings per share, we managed to have an average growth of 39.21%. The average growth for our stock price was 54.56%, and the average growth for return on equity was 19.49. Here we have the same, just for our revenues, we managed to do an increase of 14.43% on average. Our credit rating, as you can see by the graph, we started at a B plus and managed to increase that to an A, and took a downturn to an A minus. Our image rating, we managed to have an increase of 0.39% on average. Chris will take over the next slide.
Thank you, Eduardo. All right, our strategic vision statement and our vision for our company. Our long-term objective is to offer more versatile multi-industry product that can function at top performance levels using our new proprietary technology and up-to-date research and development. And this can be used for the hobbyists or government contracts, or even, let's say, real estate investors. So we cover every industry. We also transitioned into the fourth industrial revolution as a competitive leader with our AI products, performance, and outstanding customer service. Our products are bar none the best in the industry. Our performance is outstanding, and our customer service, we can take care of any problem at any time. The company believes in a sustainable practice for our company's future growth and for generations behind us to enjoy the opportunities we have. We do commit to our communities, and we perform green as clean as we can. Moving forward, we'll have Eduardo discussing our performance targets.
Well, the performance targets were calculated pretty straightforward using the average growth we had on each of these indicators. For earnings per share, year 16 and year 17, that was 20.29 and 28.21 accordingly. Same here with ROE. And credit rating, since we are currently at an A minus, we thought it would be prudent to increase that to an A on year 16 and then A plus in year 17. Image rating, just the same here, just increase it by 1 point. We thought that would be reasonable. So he's going to take over this next slide.
So for the earlier stages of our AC cameras, we had aimed to become the top leaders of the industry with a focus on being as prepared for the projections that were seen as the years progressed. But as business continued and the market took a turn that Global Robotics had not projected, thus making us choose to pursue a mix of a global best cost leadership and a global differentiation strategy. With this, we want to lower our prices to a point that we still make revenue, but keep customers happy and looking forward to the new advancements that we make in this sector. With this mixed strategy, we aim to get a higher market share with these lower prices and high overall rating. And then for the competitive strategy of UAV drones, our competitive strategies in years 6 through 8 have grown in all segments to over 20% with the decisions that we had in place for our UAV drone units. But there was no set path for the UAV strategy. But as we've seen, there was not much of a set forth strategy that Global Robotics was using. But with this information, we decided to look into what we could do to actually implement and carry out a good strategy going forward. And this was the result of a mix of the global best cost leadership as well as global differentiation strategy in years 13 through 15. With this strategy, we really plan on honing into increasing the averages of our average net revenue, COGS, delivery expenses, and large emphasis on administrative expenses. And Chris will be going over our production strategy.
Thank you, Zoe. All right, our production strategy, we have 3 different segments here. We have our overtime, our expansion, our workforce. As far as our overtime, we wanted to cut that out. We did not want to have any overtime whatsoever because we know overtime is a costly expenditure. And with our expansion, our expansion of our in-house assembly capacity was relatively early. with upgrades to robotics to cut our labor and our expansion of facilities to take on more production. We were trying to corner the market and see if we can grab market share and be able to have the expansion to move forward with production. As far as our workforce labor was kept low with gradual increases each year. This left more room to manage design costs each year moving forward from year 6 to 15. We did increase pay incentives through for our employees to keep production and our employees happy. Moving forward, Zoe's going to touch base on our finance strategy.
So Global Robotics had a financial strategy of trying to maintain a strong ending cash balance, but as of recent years, we have had to take out loans in order to keep that vision a reality for us. We have made early payments on some of our earlier loans that were taken out in our expansion period, but with this, we have been buying back stock shares to increase our overall stock prices to increase our cash at hand. Our dividend policy was to give our investors a large payout in the beginning to allow our investors a higher profit in the startup of the company, and then cautiously keep our eyes on the payout throughout the years of 7 through 10. We wanted the most revenue as possible, yet giving our investors a steady and predictable dividend payout each year, which is commonly sought out for in most investing markets. And Chris will go over our industry competition.
Our industry competition as far as AC camera and UAV drone goes, our hats are off to Bot Drones. Bot Drones did an outstanding job in both segments. If we did have another 2 to 3 years, we would be at the top of the leaderboard. Moving forward.
So our actions to outcompete our rivals. So in order to beat our competitors in the upcoming years, Global Robotics should really focus on sticking to the aggressive approach that was implemented in year 15. From the looks of the scoreboard, we are closing in quick on bot drones, and we want to be the leaders of this industry. We were primarily focused on the AC camera sector in years 15 in the aspect of increasing the number of days for the warranty across the different regions. And for our UAV drones, we had either kept the amount of spending the same or increased online marketing in a majority of markets. These decisions really raised our overall IE, BII, and weighted average score significantly when compared to the other 3 companies. And for the lessons learned, Eduardo will take over.
Okay, well, for me, I learned that we need to be constantly monitoring the industry in order to better understand the current market situation and adapt to it, obviously without losing focus on improving our product or services. I think that crafting a winning strategy is crafting a flexible one that can adapt throughout time.
And as for me, to be more aggressive as to market share in both segments, AC and UAV, to better understand key factors such as advertising, compensation, and support without having great advertising, market share falls, without having great compensation, production falls, and without having great support, overall market share is not there. So to better understand those factors are key players in a great strategy.
And for the final lesson learned, I believe that we should always have different options open when it comes to strategies. Obviously, hindsight is 2020, but having multiple backup plans to allow for damage control when something in the market decides to dip or take a turn that is least expected will give us a better outcome in the end of our business strategy. So thank you for listening, and we hope to have your business soon.